Hello, Warriors. Everyone doing okay? Hi, Brock, GM, Ren, Kevin. Everyone doing okay? Today is Thankful Thursday, and not just because the S&P is sold off. Yeah, so it's Thankful Thursday because we're thankful that we're adding value to what you guys are trying to accomplish as traders, and that you come in and you do it. We appreciate the difficulty of the task to be a trader. It's probably one of the hardest things that you can choose to do, and very challenging mentally, emotionally, across the board. So if you're not a subscriber yet to, what I consider to be objectively the best service on the net, and really, you don't have to go to get a subscription in Elliott Waves and then get one from someone who does harmonics, and then get one from someone who does basic conventional technical analysis or Japanese candlesticks. Okay. Where you also have a community to hang out with 24/6, where you have the technology that you don't have to be at your workstation because we have apps for your iPads and your phone, and we have push alerts that are going to keep you aware of what's happening in the market. If you can't or choose not to sit in front of your trading platform all day and you have it on your phone, you can act. So, hello, Sinatra and Bill. It's been a good week. Sometimes you have a good month this in a week. And so, what I'm offering and what we're offering is a discount on 6-month and yearly memberships. You contact uh, our representative and trader, Joe Perry, and Joe works something out with you today. I want to welcome all the viewers from investing.com, and looks like it could be. There you go. Thank you, Stell. Could be a significant week. I think yesterday was a significant day. So let's get to the markets. So everyone knows I've been concentrating on the short side, the S&Ps this week, right? It was a turnaround Tuesday candidate, and we had this decline with a pretty minimal drawdown. Fought its way back to make new highs, and during the session yesterday, I said I was short 3395 with a 25 handle stop, and the action yesterday was pretty negative. So we've recovered a bit overnight, but right now this looks like the S&Ps are just flagging. You had a 50 handles decline, and we haven't even rallied back 50%. This is about 38%, a 20 handle rally. We actually took out the 2 week off number, and with 2 days to go, I'm looking for a close under 3,355, which will give us a 2 week reversal, would also give us 67. We're actually lower on the week now. So with 2 days left, this could end up being a significant top. I'm not one in the camp looking for this. I've interviewed some people that are looking for the crash low to be taken out, but I don't think it's irrational or unreasonable to be looking for a pullback after this recovery. So at first I thought this was a correction. It could turn out to be if it's like an irregular up here. But why can't we have a correction of this correction if it was a correction? Yeah, I'm not saying that it's not, but are you bearish now? Anyway, so I'd be looking for fib retracements. Actually, I think this level, this 2740 level, is viable, but you have to take it one step at a time. Really, the big line in the sand is going to be 3200, as it was here, to get back inside the megaphone the way it was drawn before we had the throw over. There you're talking about 3114. So I think you saw rallies here and you're wrong over the highs. So I think there could be a decent correction. Not talking about a crash. And even if there isn't, just a couple of ideas. Were any of those entries helpful to you guys in the S&Ps Tuesday or yesterday? I don't recommend people coattail me. I'm just, providing my ideas and analysis. Yeah. Okay. So if you're not a subscriber and it helped you, peel off a few bucks and talk to Joe Perry today. All right, so let's get to what else happened. If you looked at Blake's chart of the day, this is what really turned it. Was, we had this double bottom that was taken out and this big trend line that was taken out, the uptrend line here. But look at the week we're starting to have here. Look at the wick on the Dixie. So if we got some follow through, it's not going to take much for a 2-week reversal here. So again, like, a lot of the super dollar bulls that are looking for, 110, 120. I'm not thinking out that far, but Blake's chart of the day showed the false breakdown that you see on the daily. Took out this little double bottom. Looks like it's, might give it back. It could. And we also pointed out yesterday that DSI readings, no, Charles, that DSI readings were historic, that they hadn't been there for a long time. I think the Dixie was 9. I mean, dollar was 9 and the euro was 92. And, I posed the question to Blake. I said, I bet we haven't seen those readings in years. So, maybe it's just a little bit of a short covering in the dollar. But I think yesterday's action, I'm going to go with it that it's real. So if you believe everything that happened was real, you got a break in euro. Turned out to be a nice little 1, 2, 3 drive. Then you're short and you're wrong over the high. So a lot of people feel they're late because they didn't do it yesterday. You're really not. But if you reduce your leverage to risk yesterday's high of 1965, really, if you're a position trader, you should be trading with a 100 pip stop. Okay, they don't always. Sometimes, Charles, all they do is they lead to a reaction, not a major turn, which is what I just said.
Dale, just expanding on what you're saying,
Yeah,
there's obviously different ways to trade the markets. And,
yeah,
if you're going to swing trade and you're going to keep a 100 pip stop, I mean, you're naturally just trading smaller positions. I mean,
right.
if, it's the difference between, I'm just using this as an example, trading 100,000 of currency versus a million of currency, a million of currency. And, you have a 100 pip stop. You're risking a lot more. I mean, you're risking 10 grand, where if you have a 100 pip stop and you're trading 100K, typically, I'm just using it on average, you might be only risking $1,000. So you have to take that into account, obviously, when you're trading. But when when I want to swing trade something and I want to stay in something, maybe even for a few days or a week and a half, it's really hard to be super aggressive unless you happen to be timing that position perfectly as the momentum is starting at that, and it
Yeah.
and it and it goes
And then
with
you
you.
don't need a 100-point stop.
No, and then you can, then that's when you
Like if
go.
you did it yesterday, you're already in a profit stop position.
Right. Or,
Yeah.
you were kind of aggressive. So now you've already taken some off the table, and now you can be a little bit more lenient with the remainder that you're holding. So, there's different ways to trade it. And I think that
Mhm.
the risk management part of it and the, sizing part of it that, we all do as traders is probably one of the more,
Critical.
yeah, it's
Yeah.
critical, and it's one of the more trickier parts of trading, really. So
Yeah.
anyway.
Well, I kind of, if you're and I was kind of talking as a position trader.
Yep.
And, for me, position traders isn't the same as it is for like stock guys. They hold for years. But in our business, I think position trades like a month,
Or 20,
several weeks or a month.
22 hours.
Yeah.
Yeah.
But 30 seconds. But, I kind of feel this way if you're a position trader. If you can't be wrong for a day, how can you be right for a week? So you have to really let a trade like that breathe.
Right.
Is just my view. So, do you think what happened yesterday? I see you have a pip on in your Blake, and you went back into Canada. So yesterday
Yeah.
could end up being significant. You never know till you look in the rear view mirror. But I have to think that what we saw yesterday means something until it doesn't.
Yeah, I mean, yesterday well, we saw some pretty big reversals, and that's, what I'm going to be covering here with all the analysis on these
Okay,
majors
go
is that
ahead, bro.
we're seeing some pretty big and pretty key reversals, and it's not just here, let me grab my screen, bring it over. It's not just one currency, and it's not just one asset class. It's a lot of things are actually turning at the same time, and that's, as I've always mentioned to you guys, when you have when you have multiple currencies turning at once, or whatever, that's significant, as from a trading perspective. So now, I know some of you guys are probably like, well, look at the dollar. The dollar isn't really following through. We had a bounce yesterday, and this is my chart of the day. So we had a false breakdown, and here we are, just kind of flat today, slightly lower. So what does that mean? Since we're not breaking out now, you have to remember that the dollar isn't just, the dollar index is made up of several different components, and I think what's really key here is you look at some of the cross rates, and which I typically don't do at this time of the day, but I'm going to do it for you guys really quick. You take a look at like the pound Aussie or the pound New Zealand. These are turning bullish. Just giving you an example, since the cable's higher today, and look at the pound New Zealand above the 38%
Well,
retracement above the 200-day moving average. These are actually signaling risk off. So remember, when the European currencies outpace the commodity currencies, that is a signal of risk off. So that's something that you guys have to be thinking about. Like, here's the pound Aussie. Pound Aussie looks like it's going to rip some heads off right now. You think about a currency like this, that when we break, when or if we break this 184.50 level, that's going to squeeze. Um, that's going to squeeze like nobody's business. And if you look at this is more of a guys, we have Andre coming on today. I totally spaced that, so I'm going to have to get moving. And he's our in-house uh, harmonics dude. So you guys are gonna get some pretty good analysis after I'm out of here. It's, but anyway, I just wanted to cover some of these cross rates. Like, you look at the pound Aussie, pound New Zealand, Euro New Zealand is ripping higher. Euro Aussie looks like it's about ready to take off through the 200-day moving average. When you have this happening, you guys can't just look at just the dollar index and go, oh, but the dollar index isn't really moving anywhere. No, you got to look at the components in there and then see what cross rates are moving, which are signaling bigger things in different markets. All right. So anyway, let's go through the majors. I want to get this out of the way today. And as Dale pointed out, I have some patterns in play going. One of them was because of the euro dollar. This is this right here was dark cloud cover, and it was developing by before the end of the day, and I'm like, oh, that's going to be an ugly chart pattern, and it is, and I expect the euro to come all the way back down towards the 117, and quite possibly even further than that. And one of the comments regarding the dollar index, which is really, really important that you guys understand this. Hold on really quick. I'm sorry. I've got to do something. I've got, you guys got to watch this dollar Mexican peso. This is one of those other ones that, we're breaking that 22.25 level. We have in trying to develop some sort of double bottom, if we start rallying like up towards these levels, A, it's risk off. B, it could be signaling a much bigger move, coming. Shoot, hold on. I can't get my fills and it's very irritating. Hold on. You guys got to bear with me. When they don't fill me, when they don't fill me, what happens is, sorry guys, why can't I do that?
Have like elevator music.
Is that, sorry, I didn't.
It's okay. It's okay, man.
It's the problem is these guys don't fill me at the prices that I need filled, and then next thing you know, I've got, damn it.
Next thing you know, it's moved like 50 pips.
Exactly, and damn it, and there it goes, and shoot. All right, well. And so I'm getting filled, and it's when you're trading currency. I'm just gonna give you guys an example. It was basically in addition to my dollar Mexican peso longs that I've been. If you guys are in the chat room, you guys know I'm long, and I've been trying to buy more. The problem is that when you're dealing with a currency like the dollar Mexican peso, and you're using, I use JP Morgan. It's from an institutional standpoint, it's different when you're using a retail platform. They'll just give you liquidity because it's like, okay, you're not really gonna, for the most part, most retail traders, if you're trading 50,000 currency here, 100,000 currency there, the other side, the bank on the other side of that can take the hit if they get caught on the wrong side. They'll just get in and out of it, no big deal. When you deal more on an institutional sizing, then it's harder to get fills, especially if you're trying to buy a million currency or 2 million currency or 10 million currency. It's just because there's somebody on the other side of that trade who's taking the other side of that trade that's getting filled. That's like, oh crap, I just got filled 5 million, euro dollar, and it just moved 50 pips and I'm down 25 grand. Holy crap, that's on my balance sheet. That's on my, and still, yes, you know what I'm talking about, especially you traded bonds for, big size and bonds for years.
And back then, even 10 years ago or 9 years ago, we had platforms that we had a platform that we gave to clients, and they could deal with us electronically. So you're sitting there, suddenly this pop-up comes and goes, oh, you've just traded, X amount of this. and or if it was bigger than a certain size, it will give you a request for quote, and you had to straight away give a price. So I know exactly what you're talking about.
Yeah, and you're just like, holy crap! I'm just, I just got done with a bunch of, size, and you don't necessarily want to be in that size. And hold on, I'm just trying to get some executions off here. Damn it! Sorry.
Okay. Meanwhile, I can talk a little bit.
Yeah, give me a little talk, and then I'm going to do analysis really quick.
Yeah, sure. So actually, our friend Charles is talking about the Mexican economy is slowing, the virus is spreading. That is very, very true. And I was just reading about Spain recording the highest levels of daily or weekly cases? Actually, no, daily cases since April. So this thing, unfortunately, is not going away. And from what I read, it's there's like a new strain which is more it gets transmitted more easily, but at least it's got a lower death rate. I mean, I don't know what to make of it. I'm not a specialist in this, but definitely this is not going away. The main thing yesterday, obviously, was the Fed minutes, and the Fed kind of disappointed because everybody was talking about yield curve control, what they're going to do, and more easing and blah, blah, blah. And basically, they kind of shrugged off yield curve control, at least for the moment, and they weren't as dovish as expected. So the market didn't like that.
It's pushing the framework that the Fed is doing, kind of pushed it back a little bit, and that freaked out the market, right?
Yeah, absolutely. And it's perversely, we get a more hawkish Fed or less dovish Fed, and stocks sell off, because this is a new normal. The more dovish they are, the more liquidity, the more stocks go up. So it's actually quite interesting. But that was the main event yesterday.
And it was a big event, and so a lot of one of the things that I want to mention still is, and I got to get the analysis done for as Andre's coming on today. But one of the things I wanted to say is, and I was telling people yesterday, like you take a trade, and especially if it's counter trend, like, I wasn't short equities overnight, but, a lot of people probably were. And, you wake up in the morning and you've got that trade shoved so far up your rear end, you're like, oh, man, I just don't want to do this anymore. But what you get into a situation where you happen to be
our attendees had better entry suggestions.
What?
The last few days in FACE, they've had better entry suggestions than last night.
No, I mean, but the point I'm trying to make is, yesterday was an event driven move versus, you see a resistance in the S&P and you go, oh, I'm just going to short it here because it looks like it's a fib level or, trend line or something. And next thing you know, you get run over. But yesterday was an event. It wasn't the FOMC, but because we got to see behind the curtain a little bit in the Fed minutes, it was important. So let me just let me get some analysis done. I got to get this out of the way so Andre has time to speak today. So obviously, we have these false breakouts and false breakdowns that are looming, and the euro dollar, the false breakout above the highs, really, in my opinion, highlights the risk that the euro can head back down towards 115. Now, you guys know that I've always said that was a risk. I didn't think we would hit new highs, get a failed breakout, and then, quite possibly head lower. Now, the problem here is that we had that false breakout. The lower end of the range may come into play at 117. And so I'm going to write down 117.10 is really key for keeping us bullish right now. Because if that breaks 117.10, we are heading back towards 115. And that would mean that we're in probably a much bigger range longer term. All right, so I'm not writing off the euro just yet, but that false breakout is a risk. Now, any move now back up to 119, I think anybody who's long from yesterday is going to be like, thank God I got back to 119. I'm getting out. All right, so expect that to be resistance. 117.10 is important. That's why I'm going to put double asterisks there. I think it's that important. Let's go to the cable. So the cable, another false breakout. This one tricked me. All right, the move above 131.85 really, when we drop back through, because I bought it at 132.07 or something like that. So when it dropped back through 131.85, I got stopped out. It's like, okay, well, you get false breakouts, but the problem is that it was a multi-year trend line, right? And that was 2018, horizontal resistance. It was 161% extension. There's a lot of big resistance levels up there. So now that we're back below it, I have to say that any move back towards 131.85 today is going to find sellers. I'm going to actually, instead of putting this bullish, I'm going to put it in range, because I don't think the pound has been in a strong uptrend like the euro. The euro has been. The cable, not so much. I know it's outperforming today, but that's just today, right? All right. Support for the cable right now is going to be intraday, going to be 130.70. Okay. Aussie. Another false breakout. Now, Aussie's approaching all sorts of support. This is multi-year trend line. And Stellius, can you get my attention before the data comes out, please? Or
No.
like a minute ahead of
Yeah,
time?
of course.
Thank you. Thank you. 71. This right here, this trend line comes in at 71.25. So remember we have 70, 75, 71.25, and then I'm gonna, you guys have heard me a lot. I'll keep the Aussie bullish, but that's a false breakout, and that is a risk. So any move back up, I actually believe any move back up to 72 cents today is going to find sellers now. So any move back up to 72, maybe 72.10 is going to find sellers now. Okay. Let's go over to the Kiwi. Kiwi, we are challenging 65 cents. I mean, this is a big deal, guys. And let's not ignore the fact that this is a 8-year, was it 8? 2014, sorry. That would be 6-year trend line. We are back testing that trend line, and that is a big deal. So a move below 65 cents would be devastating for anybody who's a Kiwi bull. So, okay. Big failure yesterday at this trend line that we had noted. I mean, and if you use Forex Analytics, yesterday, the pair rallying towards the 618 fib at 66.44. And you can see right when it, got up towards 66.44, and we talked about this yesterday in the daily roundup webinar. Same thing. It just rejected it, and that's a big rejection, right? Big rejection. So anyway, now any move back, I mean, I think anybody, if you got back to 66 cents, people would be so happy. Anybody who's long would be like, thank God, I'm going to keep that on range, because the Kiwi has been underperforming recently, and we've talked a lot about that. Okay.
Before we go to the next one, I think 30 seconds, we have the numbers. So
okay. So what do we got?
We got jobless claims and Philly Fed. Really, the initial jobless claims is the one that we're expecting just under 1 million more unemployed. And
so this is your data. This is your data flash. It's included with Forex Analytics. This is Bloomberg. I run a Bloomberg on my. Here's your initial jobless claims. We're looking for what? 930
or something like that.
Yeah, 920,000. Okay, 925,000 according to Data Flash. This is according to Bloomberg. So watch these numbers here, and I've got the euro right there.
Yep.
All right.
They're not out yet.
Hello. Hello.
Bueller.
The guy who posts it's unemployed.
Philly Fed just came out.
17.
Came in at 17.2, which came in worse than expected.
Yep. Okay, we can carry on, and when they come
weird.
in, it is weird.
That's weird. All right. Well, I'm sure you just scream at me when it comes out because.
Yes, sir.
All right. We gotta get.
There it is. Hold on.
What was it?
1.1 million. So worse than expected.
Worse. Okay.
Continued claims better than expected. So net probably nothing.
All right.
Nothing.
All right. Good enough. Let's see here. So let's go back into analysis. Okay, where am I at? I'm going to do this kind of quickly. Dollar Canadian. So the dollar Canadian, it's we gotta be careful with it because we are holding those longer term trend lines down at 130, 130. There's 161% extension. We got capped in Asian trade at the 38% retracement. This, guys, if you're a Forex Analytics subscriber, look at the Asian updates last night. Asian trade may find some resistance at the 132.30 level in the loonie, as this is the 38% retracement. See 4-hour charts. We're at the 38, and you can see that the dollar Canadian, we basically hit 32.30 and we pulled back all night in European trade, lower. So this is the importance of seeing the analysis out here when it's delivered. Now I do think that the US dollar Canadian is going to be finding support as we dip around the 132 level. I would say probably 131.80 down on these spike highs. 131.75 going to offer support. So 131.30, 131.75, and then resistance now is 132, probably 60. I think is the 50% retracement is going to be 32.62, and then big time channel resistance, or when I say channel resistance, this is like no exaggeration. This is really big. Big resistance comes in at 133. So this is 32.60, 133. And does that look screwed up to you too? Is it just me?
Yeah.
Okay. All right. That's probably something to do with my what do they call it? Graphics card. Because I run 6 monitors on this computer, and I'm running multiple programs, so it's probably something to do with that. Dollar Swiss. Okay, so the dollar Swiss, and I was reading some JP Morgan and now it was Citibank analysis last night. They attributed a lot of the dollar strength yesterday to major dollar Swiss flows that went through the market yesterday. Which, if you saw the dollar Swiss, it was just ripping nonstop. Flows is an equivalent for saying the
S&B.
Yeah, Swiss National Bank was out there buying yesterday. Exactly.
They're the flow.
They were the flow. But you have to imagine that we, like the other dollar pairs, we had a false breakdown. So if you look at this, let's go over to how significant this is going to be. If we break 30 or 91.60, that's going to be a big deal.
Like it.
I think that's key resistance. We are still in a bearish trend, and you guys, if you've been listening here every day, you know that as long as we're below 92.40, it's bearish. Period. But That doesn't mean we can't get counter trend moves. And this is where, we break above here and it becomes significant. We break it above the 91.60 and it becomes significant. So support, we should find support any dip back down towards 90.50 now. 9050. Let's go into the, hold on really quick. Just bear with me, guys, really fast. Okay. All right. So, did I get that? I did. Okay. The dollar yen. Doing this really quick. I'm going to get it done within 5 minutes. Then Andre has time to speak. Dollar yen, very messy, very ugly. Have nothing to do with it. 105.60. Back up to, remember this is channel resistance up here. So 106.50, 105.60. You guys can have fun with that. 105.60. Wake me up if we get back to 104.50. Okay, we are range bound there. Dollar index. Dollar index. Here's the dollar index. Again, this looks very much like the Swissy, right? For the most part, but you guys know that if go read my chart of the day yesterday for in-depth dollar analysis if you really want it. But what I'm thinking here is we're probably doing something more like this. We're just probably flagging, and we're going to be eventually breaking higher. So I'm just looking for dips to buy the dollar in general. So probably
that 9 DSI on the Dixie was a pretty prescient thing. And 92.
It was really a big deal yesterday, I think. And I think we pointed that out here. So
we did.
Yep. So if you guys are
best webinar on the net, bro, in my in my humble and extremely accurate opinion.
All right, 93.20. We are still in a bearish trend, though. Let's not ignore the fact that if you're long the dollar right now, you are counter trend trading. So just and that's something that we have to be cognizant of. And it's important to realize that when you're, if you're trading the dollar on the long side, you are trading counter trends. So you have to be a little bit more careful. Okay. Where am I at? Dollar MEX. So we are at key resistance here. I'm not even going through analysis because this is, you guys already know this from yesterday. Same numbers as yesterday. US dollar, Norwegian krona. I will use this though, because look at the US dollar, Norwegian krona. We are at basically the trend line, and you can see how we're knocking our head up against it. It is key. And if crude oil starts to roll over, you see the dollar Canadian rip higher, this one could really start to squeeze. We could squeeze right back to 920 pretty easily. And that's a big move for the US dollar, Norwegian krona, by the way. I'm going to write down 897 today. 897. So you guys just, if we start breaking through that, you just watch it, because it's a bearish, but right now it's in a bearish trend, but that doesn't mean we can't squeeze. 8.81. And you guys know that that's significant. 161% extension. Gold. Gold's caught a bid, huh?
It went right to your lower numbers that you had on the bias chart yesterday.
Did it?
Yeah.
Let's see. What did I have on my bias chart yesterday? It's just so you guys can, let's see. FH.
You had 1920.
This is yesterday. Gold, no, 1965. 1965, okay. But we were talking about 1930 yesterday. I just didn't think we'd get all the way down there. That was, and we actually traded below 30. We're at this is the, remember, this is the all-time highs. So just, if if you're wondering what are we doing here, it is the all-time highs, right? What I'm most concerned with is regarding gold is if gold breaks below 1900, because that's this trend line here. This is an hourly. Maybe go to 4 hour, it'll be a little bit better. This trend line here comes in around 1900. That's important. That has to hold. If that doesn't hold, then gold bulls are going to have some problems. Okay. Let me get rid of. Already got rid of that. Okay. We are still bullish, but you guys know that as I've explained to you guys for a while now. Let me get rid of this. This is from yesterday. I think we're in a consolidation phase, and I wouldn't be surprised if we broke lower first before going higher. So any move back up to 1775 should find sellers, and I'm almost done. So 1775. Andre, how are you, man?
Hello, everyone. I'm fine. Thank you very much.
Hey, all right. Let me just finish the S&P.
Okay, take your time. Take your time.
Thanks, man. Good to hear your voice, by the way. How is Portugal? Sure. Is it still hot there?
No, a bit cold.
What?
At this point, exactly. We have rain after a few hot days during the previous week, and we have rain at this point. I believe the sun will arrive again next week, but we have some fresh days to relax at this point. Yes. Finally.
So really quick, guys, this trend line, I was talking to my colleagues in Connecticut yesterday, and it was at the end of the day, and we were trading up here around the 33.73, and one of the partners is like, where do you guys, where do you see key support? And I'm like, I see it at this trend line about 30 points lower than where we're currently at. And we were trading at 33.70, and I thought a dip down to 33.40 would find support. And we actually just came down and tagged that trend line. So what that means is today's low is very, very important. So I'm going to write down, you guys know 3,300, but that's key for the bulls.
Double asterisks.
33.50 is going to also be pretty important intraday. I do believe we're still bullish, and as you guys know, 3,400 would be a quadruple asterisk resistance because it is key. And there you go. There's your bias chart is now done. So there you guys go. Andre, it's good to hear your voice. I hope all is well, and I hope it warms up for you. You know what? You can take some of my heat. I'm done with this 110-degree weather. I'm done with it. So I'm finished.
We can change for a bit. I would like to know your city and your country, so we can change for a bit. You come to Portugal, and I go to United States.
Sounds good. Do you like cactus? Do you like scorpions? How about rattle?
Not
Javelina?
really.
What is a javelina?
Not really.
All right, coyotes. We got some of those.
You have all of those animals, so I prefer to stay here.
Yeah, it's the thing is people look at the desert landscape and they're like,
yeah,
it's so beautiful, and I have to explain to people it really is like when deadly creatures can survive.
Yeah,
it's not really the most pleasant place. You don't want to get stuck in the desert without anything. That way. It's like being in the jungle without nothing.
I can imagine. I can imagine being.
Let me just mention really quick. For those of you guys, I have to clarify something. If you want to try to get Forex analytics for free and you want to open a Pepperstone account, Pepperstone is one of our sponsors, along with Forest Park FX. If you're in the U.S. and Canada and you want cashback rebates, but if you want to get Forex analytics for free for a period of time, you have to use the link that is in the that connects to our site, and you have to follow the steps because you have to let us know. We have to authorize it personally. It's like a one. Stelios, you want to explain the process a little bit here, just because we've had some confusion with people.
Yeah, basically, people need to use the dedicated link, and that will then make us aware that you have done that. Then we're going to be in touch with Pepperstone, and then the 3 months for Forex Analytics is going to be authorized. If you use any other link to join Pepperstone, then unfortunately you're not going to be eligible. So you have to be very careful and use our specific link.
Yeah, because we have to physically turn you on. So
yes,
that
I do that.
Yeah, Stelios grabs the lever and he pulls it, and then you get, okay. Yeah. All right. Anyway, guys, I'm going to pass it over to Andre. Andre, thanks for being here. I don't want to take any more of your time. Thank you all for being here, and I'll see you guys on the daily roundup for those of you that are Forex Analytics subscribers. So see you guys.
See you, Blake.
Thank you, Blake.
Thank you,
Hello,
Coach.
Andre.
Hello.
Well, you're welcome, bro. Hey, Andre, you get all your charts out of the museum?
Almost.
It's all art.
Not yet.
At the
not
Louvre?
yet. I'm negotiating with the government.
Oh, okay. All right. So it's going to be interesting to see what you're going to present here.
Can I take the screen?
Yeah. If Blake.
Thank you very much.
Yeah, there you go.
Okay. Just because someone was asking about
copper.
Copper. This is my view on a weekly, so not a very constructed chart, or not a very interesting at this point. But this is a weekly time frame chart. We are trading above this trend line resistance, so just for you to know. And one of the patterns that I can see forged here is the one eventual inverted edge and shoulders. If that fails, eventually we may see the price rallying above these previous highs. But one of the patterns that I'm seeing here is the eventual pullback into a right shoulder and then new highs for copper. So basically, we are trading above one trendline resistance, and it may turn into a bullish momentum above this trend line. So I'm not used to follow copper, but this is just because someone was asking a few times there. So I believe there will be a retracement before new highs on copper, unless the market starts to rally above. In terms of patterns, in terms of harmonic trades, in harmonic patterns, there's only one at this point, and it's basically the M shape, the BAT pattern at 88% Fibonacci retracement. So that requires a retest of the previous structure highs for copper. So this is a weekly time frame. It will take some time to reach those levels, and obviously we need to wipe out those resistance above the 353. So basically above this resistance, I believe the market will retest these previous structure highs. So as I was saying, I'm not following the copper, but just a fast approach for that chart. So let's start with some of the pairs that I used to follow on a daily basis. So basically, we are trading let me show you this major trend line resistance. So we are now threatening this structure. So I believe breaking above that structure, or breaking above that monthly fractal above, will trigger more upside momentum for the cable. I published this chart before inside Forex Analytics. So basically, we are now facing the 88% Fibonacci retracement, 132. So I published this as a potential pressure price zone. If the market decides to trade above, the next pressure zone above 137 and then 148. So this is the BAT pattern, the alt BAT pattern, and the crab pattern extended above. The crab pattern extended at 160 extension, it will converge with this major shark pattern. So basically, it's one three-wave structure followed by a rally to the 160 extension. So, but for that, we need to see the cable trading above this trend line resistance. So if that happens, I believe the market will rally above, and we need to pay attention to those levels above. So basically, in terms of downside momentum or downside retracement, If that happens, I believe the market will may find some support at 38% Fibonacci retracement, which is the default target for the pattern, position at 125.62. So for those who are searching for bearish trades or bearish setups, we are now facing the bearish pattern at 88% Fib and reinforced by that trend line, approaching trend line resistance from above. The euro now approaching the 168 extension. So as mentioned by Blake, I have that chart, I believe, shared here. Let me just push those actually webinar online. That's great. Weekly. Let me try to show you. So I published this chart before. We were trading at around 118 on euro dollar. I published these two pressure zones above. So this is a weekly time frame. Obviously, we are just approaching the first Fibonacci level, the first pressure level for the shark pattern at 168 extension. So basically, we are trading below that level. I shared a few setups on a lower time frame. This bullish pattern at 88% Fibonacci, I published that chart before, and then most recently the price has found some resistance at 119 and just a few points above the 224% Fibonacci extension. So that forms the bearish shark pattern. Basically, we will trade, and just for those who are learning process, from the finish or the completion point, as soon as the market completes the pattern, we will target the 38% Fibonacci retracement. So basically, we have a trade for 83, 84, 80 points, 38% Fibonacci retracement. So that is my initial reward and my first target, which allows me to, and I always like to repeat this, which allows me to use a one-to-one or to identify a one-to-one risk-reward approach, which allows me to be positioned inside the market with those ratios. Basically, what I want to see is to maximize my trade at the 61.8% Fibonacci retracement. So that will help me to maximize my profits, obviously, and if the price decides to retest those fractals, even better. As soon as we achieve the 38% Fib, we get right from my risk. I don't have any risk at this point. Break even your trade and just trailing stops below the golden Fibonacci retracement if the price decides to reach those levels. So very sharp pattern for euro versus dollar, very close to that daily or weekly 168 extension position at a few points above. So I will not, let's say, I will not be surprised if the price decides to print a new high just to fill that major pattern, that 168% extension. But this sharp pattern motivated me to engage and to get involved at this price zone. Let's see what the price will reserve to us. Australian dollar, Aussie versus the dollar. I published these head and shoulders, that inverted head and shoulders before. Default target reached, and as soon as the price achieves that default target at 200% Fibonacci extension, it has felt some pressure. We are now approaching what I think it may be a potential support trend line, ascending trend line support. I got some messenger here. I'm not sure from where. Let me just, okay.
Faza toda essa analyse technique do trade.
If you do all the analysis before the trade, that's what Mario Andrade is asking.
Mario Andrade?
Mario Andrade, yes. Of course, Mario.
Race car driver.
Of course, I do my analysis before my trades. I don't. I never enter. I know what is it. It's this. Okay, I was receiving those voice messages.
Andre, I have a question. Yeah. Remember, your dollar index chart was making the rounds on Twitter?
Of course.
last week, and
Mhm.
you had the potential of 9140.
9140 is still available, is still there. The pattern not formed. We are now threatening the daily fractal support at 9252. We have this measure. So let me try to, first of all, let me try to talk about this trend line support. So basically,
Okay.
I like to find, I like to identify the previous lows. Obviously, the previous lower lows was formed on March 17, and then the market has reinforced or retested those lows on April. Basically, after these lows, the market has started to trade higher, and we have well, how can I say this? If we put our trend line there, so covering these previous structure lows, and actually we have a nice support there. We are trading below that trend line. So that for me does not identify the breakout of the structure. The market can find some support there, as mentioned by Blake, a false breakout below and then rally above. So basically, there are a few ways to draw those trend lines. I prefer to draw my trend lines based on the first lows, and then I extend the trend line above. If there's a low that supported there, even better. If not, I need to wait for the market to confirm the breakout below this specific trend line. So basically,
my question is, I know we didn't get to 9140, but is a 92 close enough for government work? Could it have turned?
Yeah, of course it is. Of course it is. We are trading very close to the 78% fee, which is a natural pressure Fibonacci level. We are trading between the golden Fibonacci retracement and the 78% fee. So if anything that happens inside this range, I believe we can try to take advantage from. So,
and you also represented this pullback would be a continuation head and shoulders bottom. Does it still have that look?
Edge and
Were you kind of showing that? Yeah, this would be the right shoulder here. This is 86.
This is the right shoulder. No, inverted edge and shoulders.
Yeah, you were showing that.
Let me try to.
So you have a neckline at the highs at 103.
Let me try to pick that chart, Mr. Dale. I'm not the Dixie. I published that chart.
Yeah.
Okay.
Well, it was on Twitter.
Oh yes, on a weekly. Yeah, of course.
There you go.
Of course. Yeah.
See, I remember your work more than you.
It's true. It's true, my friend. Exactly. One eventual right shoulder for now.
Yeah, right.
One eventual right shoulder. So exactly, the market can be forming that right shoulder at this point. I was trying to identify the pattern because the pattern is not formed yet. But yes, this can act as an inverted edge and shoulders with the left shoulder, and we are now eventually forming the right shoulder. And as I said before, I believe I projected these trades before. I project the close price of the structure, so of the pattern, and I project that 200% Fibonacci extension as a default target. So basically, that eventual edge and shoulders formation, an eventual inverted edge and shoulders formation, if triggered above the monthly fractal, and we need to wait for it. That's the reason why I'm not paying so much attention for that pattern at this point, because I need the price to validate that pattern.
Right.
And we need to wait a lot. So the monthly fractal position at 102.99. So basically above that monthly fractal, we may see the price threatening that level or approaching that level. Note that we are actually inside one potential ascending channel. If the market finds support at this point, I will not be surprised to see a retest of the highs again and inside that range. But again, weekly charts, weekly time frame, it will take some time. We should go into a lower time frame and try to identify potential reversals there. Let me just check, because I was also
you have any harmonic pattern that would take it back from
let me try
95,
to see.
95 and a half?
We are trading the 113% Fibonacci. Well, if the market decides to print this false breakout and recover above the, basically the same, the same idea mentioned or shared by Blake. If the market decides to recover above 93, 91, so which is our daily fractal resistance, if the market decides to recover that level, we may see more upside momentum for the DXY from these levels. We are actually printing this nice false breakout above. We are trading very close to the 113% Fibonacci extension. So this may forms the alt-bat pattern at 113% Fib. So basically we are trading very close to that price zone, and a recover based on the pattern, a recover and the default targets for that pattern, potential recover for the DXY may put the price trading back to 96, 97, 96.29. So basically the previous structural lows or the most recent one. If the market decides to bounce from these levels. So just to finish, Dale, because I know we have an interview, and just to tease some of those who are here for the first time, just to invite them to join us, because we have amazing charts published there. This is just one of them. This is the pound versus the New Zealand. We projected that pattern at 168 extension before, so the market has found some support there, and it's now approaching the second target for the pattern, which means we have a break-even trade at 38%, and we will trigger our trailing stop at the golden fib. As soon as the price achieves that level, we trigger a trailing stop there. I call your attention for the New Zealand versus the yen. This was the bearish bat pattern printed at 88% Fibonacci, reinforced at a type 2 bearish bat pattern, so reinforced with a new high and a potential double top there. We need a violation of the previous structural lows in order to validate and to trigger that double top, or that technical double top. Basically, default targets for the bearish bat pattern, as always, 38% Fib, break even your trade, partition your trade, and target the golden fib as a second target. So this is just one or two setups that we have at our disposal inside Forex, at your disposal inside Forex Analytics. Norwegian krone, also a nice, very interesting bounce from the 168 extension, bullish scrap pattern printed, default targets at the previous structure resistance, and daily and weekly fractal support. Weekly fractal support at 9.1965. So default target for the pattern, 38% Fibonacci retracement. We may see Norwegian krone searching for that 200 moving average approaching from above, and the previous structure support. And to complete my analysis for today, and to give space to our interview, the Canadian dollar also threatening one ascending trend line support, reinforced by the monthly fractal support at 129.51. So we are now trading the 88% Fib. This is actually another pattern that we have projected before, the bullish bat pattern. Default target for the pattern, 38% Fibonacci retracement adjusted to those levels, to those lows. Weekly fractal resistance should be retested once again. So this concludes my presentation for today. I hope you enjoy, and let's see what the market will offer us based on those trades, on those setups.
Thank you, buddy.
Thank you very much.
That's Andre Cardoso, the Picasso of harmonics.
Thank you.
Okay,
very much,
Larry,
sir.
thank you for your patience. I'm going to get you set up now. And Andre, if you could stop sharing. Thank you. Welcome back, Larry.
Dale, how are you?
Good. I know you're okay because you were very constructive the market. You know, the previous two times I've talked to you. So, and you know, I know you use 50-day moving, and um, let's take a look and give you a victory lap from your last interview, Larry. If you know how to share the screen again, we could do that. That's a green share button.
Let's see if I think I've got you here. Let's see.
Yeah, you got it. You got
Are
it.
you there?
Got it. So we're looking at
Perfect.
Freeport.
Okay.
So tell us how you were. You know, I talk about this, Larry, and I can tell just from having talked to you a few times that it's one thing to make a good forecast. That's just being an analyst, right?
Right.
And then you go another degree of difficulty, and that's to put on the trade or the position, because that's different, because now you have the emotion of risk, financial risk in the equation. And the toughest thing to do is, in my opinion, and for me, maybe that's why I think it's tough, because it's tough for me, is a great hold, is having the patience and the discipline to ride a move that you probably thought was, you know, once in the last month or so with us making new highs, started to look stretched by any measurement. So nice hold, Larry.
Thank you. Thank you. Now to get started, so let me start somewhere else then, because Freeport, so I've just started to move in myself to the cyclicals. So the last time we spoke in June, I had started to put cyclicals on the buy list, and I had the metals and mining ETF, XME, which has Freeport and all of those basic materials and metal stocks. But I've still been pretty much positioned heavily more into tech. So
Right.
NVIDIA, Microsoft, things like that. But I started to rotate more into the industrials and the industrial metals. And that's where I think, from a risk reward perspective, I think probably the best potential reward versus risk is in the industrial metals. But if we just want to touch base, like you said, on a couple ideas. So NVIDIA is probably my NVIDIA and Square are my two top open positions in tech right now. And these, I mean, just talking about the 50-day moving average. So
Yeah.
NVIDIA, I got into NVIDIA right here. I don't know if you can see on the chart.
Yeah,
the
your
middle
cursor
of
shows.
Yeah, middle of April at 280, and this has just been a straight run. I don't even think it's closed below the 20-day moving average now that I take a look at it. So NVIDIA's been a very strong run. Square's been a super strong run. So this is my top open position right now. And what I've done with these stocks, so I have scaled out. So on Square and NVIDIA and Microsoft and these tech stocks. So I've scaled out of some of the positions, you know, maybe 20 or 30% on the way up. But even if you look at Square, it hasn't had one close below the 20 days. So really what I'm looking at with these names, as long as, from my time perspective, as long as they stay over this 50-day moving average, then I'm just gonna let them go where they
go. Okay. Yeah. So do you do anything with like notice on CNBC? She's not an analyst, she's an anchor, Kelly. I forgot Kelly's last name, but she's starting to do a feature of showing stocks how far above the 50-day moving average they are. And I think she's using it as, you know, showing how, you know, how strong and how things are priced, a lot of things priced for perfection by being that much, whether it's 20%, 30% above the 50-day moving average. Are you getting any inklings that we're getting close to where the 50s on a lot of these issues could be tested?
You know, I don't look at that. I don't look at it, and I'll tell you why. What I found over the years is anytime I start to look at these statistics, like, you know, what she's talking about, percent over the 50 days now, what it tended to do was it would make me hesitate on just trading the chart. So if I got a breakout signal, but then I look at something else and it says, well, you know, stocks are, so I just don't look at that stuff. Here's what I do know: at the end, I'm going to be long at the top. I'm not going to get out at the top, and I'm going to give some back at the end. But by just waiting until it actually breaks down, I'm okay. Even if I give back, it could be 10 or 15 or 20%. But if I've got to give back, 10 to 20%, but I catch the 100% move here. So I will, at the end, I might scale some out along the way, but unless this just has a parabolic, just a giant gap higher where I take some more off the table, but so I don't look at that too much.
Let me ask you this then. What's your sell discipline? Is it closing under the 20? Or do you have to wait for it to close? And I'm just assuming that if we start taking out the 50, you don't want to be long.
Right. In these longer term positions, basically I've got my stops underneath the rising 50-day moving average. So if they start to test down there, then I'll be out.
Okay.
Now in the shorter term positions, and I don't have too many shorter term positions right now. In a choppy market, I'll tend to take some shorter term, swing trades, primarily in ETFs. And then my stops are a lot tighter. But when we get into a market like this, where it's a pretty strong trend, then I don't want to over trade it. And then I'll run the stops a little bit wider.
Okay. All right. So it sounded like you're making a switch from growth to value. Is that what I was hearing with the industrials?
Yes.
It's a rotation into the old economy, actually, isn't it?
Yeah. And I'm rotating, and I'm not cleaning house. So I've got Tesla, I've got Amazon, I've got all the traditional higher momentum growth stocks, but I am a position at a time. So I rotated out of a couple cloud software stocks. So I had a lot in cloud. I had about 5 cloud positions. So I rotated out of a couple of those, and I've moved into Alcoa. So Alcoa is a position that I just took this week, and this is a pretty clean chart. If you take a look at Alcoa, it's got a nice intermediate term uptrend, cleared the 200-day moving average, but it had a consolidate down here, consolidation breakout, consolidate breakout. So over the 200-day moving average, this is, for me,
so that's when you got long. That's where you got long over the 200, right?
No, I just got long. What day's today? Thursday. I got long on Tuesday. So I got long this red bar right here. So this is a new position for me. Yeah. Caterpillar is an industrial that I've got. So I took Caterpillar.
I just want to take it back so we have a teaching moment here. Can you go back to that chart? Okay, so looking at Alcoa, and here's the psychology of, I could hear it in my head, so I'm sure a lot of people hear it in their head. They look at where Alcoa was in March and April and May and June, and you're looking at a triple in price.
Right.
And a lot of people will go, well, I can't buy it after it tripled. Tell people why you can, that the price doesn't matter.
Well, let's take a look at where it was.
Tripled.
Yeah. So now if we take a look at where it was 2 years ago, it was $62, right? So we can look at it. It is a triple off the low, but what I'm looking at is if I take a position today, what's my expected return from right here? So let's call it, I bought it at 1477. So if this stock, goes to 21, which isn't too far up the chart, it takes you back to February. That's a 50% move from here. So what I'm looking at is if I've got cash today, where is the highest potential? It doesn't matter to me where it was. It's tripled. Right. I wasn't there. But if I can get from here and get 30, 40, 50% on my money from here, that's all that matters to me now, not what happened yesterday.
Oh, why wasn't I buying it at 7 or 8? And
but keep in mind, when it was 7 and 8, I was buying Square, which is double. Yeah. I was buying Nvidia, which is up 70%. So in hindsight, everything makes sense. But all I'm looking at is right now.
I've got is money. The key word.
Yeah, I've got money to put to work today. Where do I see the best potential reward for my risk? And it's this is one of my names.
Yeah, I think that's something that bears are finally starting to learn, is that money's not leaving the market. It's just rotating.
Hmm.
And the rotation, when we had that softness in some of the FANG names before we had all those great earnings, people were saying, well, the market, if FANG gets in trouble, the market's in trouble. But then there was something else to pick it up. We had a little rise in yields, and the cyclicals came back. So,
Yeah.
just because a sector, you could have a strong bull market and have a few sectors not participate or even be in bear trends. You know what
Sure.
I'm interested in here, because I know you mentioned it at the beginning of the interview.
Sure.
Mining and manufacturing, when you were showing Freeport, and I think last time you had some exposure to the gold miners too,
Yeah.
didn't you, Larry?
Yep. Yeah, I
Okay,
still do.
so I mean, we've had one thing I noticed, especially when gold went parabolic a few weeks ago, before up $90 on the week,
Right.
that the GDX was and Newmont was unchanged on the week, with the physical metal and silver and gold going parabolic. Um, so they were underperforming the metal. I'm
Right.
wondering, with the recent sell-off that we've had, you still holding those?
I'm still holding it, and I bought some last week just
Yeah, on
over
that.
$40. Yeah,
Okay,
so I'm still long here. When it pulled back last week, I bought some.
okay,
I didn't buy this exact low. I'm pretty sure by looking at the chart, I bought this little bar here. So what happens in a pullback? Once they start to pull back, I don't try to buy into the pullback. I wait till it stops going down, then starts to move back in the other direction. But yeah, I'm still long here. It's still, if you look at the chart, it's still in a pretty strong uptrend. And they could get me. I could be wrong. But what I won't do is, if it starts to head south, I'm not going to keep buying it on the way down here, and then eventually I get stopped out if it
okay.
goes south. But
Yeah, all right. So
what the other
where
thing,
you're wrong, under the red moving average at 38, or if it
I've
closes
got,
back. Go
off the
ahead.
top of my head, my stop. So my original position is $30.55,
Yeah.
and then I bought some more. So off the top of my head, my stop is high 34, somewhere under here.
Okay. All right. Anything happening? One of the weakest performers or non-participants has been in. You're still avoiding energy.
Yeah, yeah, energy. There's only one energy chart that's on my screen, so I don't have a position here. But I put this on the buy list about a week or so ago when it came over the 200-day moving average. So Halliburton
Okay.
is the only. This is a strong chart.
Yeah.
If you, and once again, someone could say, well, like you said, it's up 300%, whatever the number is. But by the same token, so if I can put money into Halliburton today, if it just gets back to the 2020 highs, that's a 50% move. Now, if we take a look longer term where Halliburton's been, so there, you could look at the chart and say, wow, it's up fourfold. By the same token, I could say it could go up
Right.
100%. You know what I mean? If
Yeah. Now
there's
I
a
know
recovery.
how you also justify it. You go to your telescope,
Yeah,
because yeah, your
big picture.
telescope. Yeah. So it shows. Oh yeah, it's tripled, but now it's performing, and is just for it to rally halfway back would be a huge winner.
Yeah,
I'm wondering, with the blip we had in yields
yeah.
last week, if
Hmm.
some of the interest sensitive sectors are showing weariness. I know the housing stocks have still been on fire. I saw
They're
them when
they're
we.
on they're on fire. This blip did catch my attention. So 50 basis points on the 10-year. That's been a key level. So when they had the
Right.
reaction sell off in March, it held 50. It held 50, and this blip did catch my attention because it made the dollar spike, and it took gold and silver down with it. But it's starting to come back in the range. But where I'm really focused, it's like a barbell. So I'm focused in the higher beta stuff. So I'm in tech, but I'm also in cyclicals, but I'm avoiding REITs, utilities, and the lower beta, so pharmaceuticals and things like that. So I'm positioned for an economic recovery with the
Okay.
higher beta positions.
And if that happens, yields could go to like your green line. I'm looking for about 120. You think that would upset the apple cart because that would almost be a fourfold increase from 50 basis points to say 120, about 3 times. Is that going to have any impact on valuation models?
Oh, sure. Yeah. Yeah.
Could that be
if
what
there-
triggers a correction, Larry? Because, I was looking for rates to move up with the recovery in the market. And
Right.
what you're showing, that's, old, old school stuff, right? So that didn't happen. But could it be that with the yield curve steepening a bit and yields beginning to rise, that might be something that takes some of the air out of the balloon?
I think that would be the most likely scenario. So I think interest, other than a major healthcare setback, any sharp move in interest rates or a reversal in the U.S. dollar would definitely have some type of a spillover effect into the other markets.
Okay. All right. Anything else you want to share with us?
Yeah, so there's a couple. So in the cyclical and in the industrial metals, so we took a look at Alcoa, another one that I put on the buy list yesterday. So Tech Resources, and this is another one. Now these are some mid caps, $6 billion market cap. But if you take a look at the chart on Tech, it had a nice sideways consolidation for about 3 months there, broke out over 12, broke out over the 200-day moving average. So that another one. So these are more volatile ideas. So people have to understand the volatility. But Cleveland Cliffs is another one.
What do they do?
Cleveland Cliffs is in the iron ore business.
Okay.
So iron ore, steel processing. Now it's another one. Okay. $2.5 billion market cap. But then I've got the regular, high, larger cap. So Shopify, and someone could look at Shopify and say, well, it's extended, and it is. But it's been extended pretty much the entire way up. So as long as these mega cap names are holding the 50-day, then I'm going to lean to the long side. So Square, we looked at that. Now some of these that started to break down. So I've never had a position in Fastly, but now this chart is a little more troubling. So it had a huge move, which I wasn't in any of it. But once they start to break down like this, and it's tested under the 50-day, so really 72.50. But this caught my attention because some of the momentum names, Datadog was another one that, that's a pretty tough chart right there.
Yeah.
So it had a strong move, but then it started to break below the 50-day. So I'm in Tesla, and I'm holding into this breakout. And Tesla's another name that it continues to look extended, but the 20-day moving average for the most part held the stock, and then it broke down, had a double low here at 1365. But so that's where I'm at. Large cap tech, but also the cyclicals, the industrials. I've got Caterpillar, which I think is setting up pretty well if you take a look at the longer term chart, and that's where my positioning is right now.
Okay, Larry Tentarelli, the man without fear, because the man has a plan. Yeah, the only reason that you have fear is because you don't know what you're going to do if things turn against you. And you could tell, Larry's been long in making money, but he's always ready if the market tells him to get out of the way, and it won't be at the top for getting out on longs, and he won't be long from the bottom. And all the things that amateurs think about and hold them back, he's overcome by having something that suits his personality. Larry, I've interviewed Jack Schwager, author of Market Wizards, and I said, what's the most important advice you could give to a trader? And he said, find a trading style that fits your personality. And I could tell that you have found something that you're comfortable with, that's working for you, and that's how you could do this without worrying about every tick and one day doesn't make a market, that kind of stuff. Let's see, I'm getting something. Forex Gal, top 6 tech stocks holding up the market. Oh yeah, Forex Gal sent me an article. The the concentration in the Nasdaq. But Forex Gal, look at what Larry's shown you.
We'll take a look at this for a
yeah,
second.
yeah.
Do we have a minute?
Yeah, we have time.
So this is genomics, right?
Yeah.
So here's home construction. So if we
Yeah.
take a look at trucking, so here is
Wow.
trucking stocks, right? Then you can take
Yeah.
a look at healthcare. So here's healthcare.
Take a look at everything.
Yeah, I mean,
basically,
it's a consumer discretionary. If you take a look, so when people say, there's consumer discretionary now, here's consumer staples. So when people say it's a narrow market, that really doesn't. If you look at the charts, it really doesn't play out that way. So if you look, look in industrials, here's Cummins, here's Fastenal. So I mean, you can pick an industry, and Fastenal, they make industrial supplies, and it looks like the Nvidia chart. So they're
Right.
under the when you've got semiconductors, home construction, trucking, and all these economically sensitive sectors at new highs. There's a lot more than just Apple that's holding this market up.
What a great point, Larry. What a great way to wrap it. That's a teaching moment. I've seen that too, and that under the scenes, you watch some of the programs and people go, well, how come you haven't been in Salesforce, or how come you haven't been in Tesla? And people could show other shares that have done so well. You can't own everything.
Yeah, there's trucking. I mean, what's more basic than trucking, right? Trucking is at new all-time high. So there is, I could name 20 sectors if I had time that are in the upper right-hand corner of the screen, and they're not tech.
Okay, Larry, why don't you show it? Yeah. Oh, lumber. Yeah, lumber's at new all-time highs. There's I guess some home builders can't get any wood to build.
Lumber's at high. Now, keep in mind, this obviously the super low interest rates plays a part with that, but I mean, they're all, if you take a look at Best Buy, which is in consumer discretionary, I mean, it's just right now, now here's the thing, it'll come to an end at one time. I don't know when that is, but for now, the argument that it's Amazon and Tesla is just not working. That's not it.
Well, I think we're marking at least a high for a correction.
There'll be a correction at some point, for sure.
Well, I'm giving you the point. It started yesterday.
Could be.
Okay. Anyway, I'm on record, and I've worn a clown hat before because I could be wrong.
I got you.
Anyway, Larry, what's the best way for people to follow your work and what you're doing?
So the best way, if they want to follow me on Twitter, it's at LMT978. And then if they want to go to the website, it's bluechipdaily.com. It's the Blue Chip Daily Trend Report. And they can go on to 2020 Best Trade Alerts. So what I do is I screenshot. We've got a lot of nice, not only for myself, I've got Livongo that's up about 80%, but even for subscribers, every day I post a daily best technical idea. And and it's not just tech. It's industrials, it's pharmaceutical, it's wherever the charts go, that's where I try.
Reasonable subscription price, in my opinion, too. So, Larry, you're a pro, and I've interviewed a lot of people. I could tell that your demeanor shows that you've been doing this for a while, and you have the discipline. You're not emotional, and I really appreciate you bringing in your bullish viewpoints. Gives me some balance. So I hope that things continue to work. You and your family remain untouched from COVID, and when we get back together after the elections, whether in November, they should be over sometime in November, don't you think?
Sure. Yeah.
I mean, this first time we've ever going to see a contested election if the incumbent loses, because he's already saying that there's no way he could lose unless it's fixed. So it's going to be a possible constitutional crisis here. I'm interested in how the market's going to react when America can't have a smooth, peaceful transition of power. I'm a little concerned about that.
You know, and the one thing that you said, you know, I go into every day. So the VIX is still at 22, which is historically high. There still is obviously the healthcare crisis is going on, and we're going into an election. So even though I'm long all these, you know, higher beta names, I do know that at any point the market can start to turn down. So I always have my eye on the exit signal because I know that nothing goes on forever. So I want to stay long as the trend is working. But yeah, I mean, volatility could pick up for, you know, any reason.
Yeah. And that's a falling wedge. It's kind of a bullish formation. The one comment I have on this fixed chart is the market has made new highs, but the gap that we left on the VIX has not been filled. It's at 18. And that's
Right.
kind of constructive. I would have thought with the market at new highs, we would have filled that gap. So I like the look of the VIX chart right here. Never sell a sleeping market, right?
It's definitely in a downtrend right now. So as long as they can keep, you know, I think as long as the liquidity, that's the big thing, and we spoke about this the last time. As long as the liquidity is primed, then at least there's some type of a floor that's out there. If the Fed came out, and I don't think they're going to take back this QE anytime soon, but I think that's what the market is going to look at too.
Okay, Larry. Well, thank you for coming in and showing your views and where you have skin in the game on all these different issues and edifying the FACE community. I appreciate it.
Dale, I always appreciate you having me on. Thank you very much.
Okay, we'll get together in November, okay?
Excellent. Sounds good.
I'll send you a DM. All right, everyone, that's a wrap. Good hunting the rest of the day. We'll see you on to wrap it up tomorrow, TGIF. And remember, don't just count your pips or your shares or your coins or your sardine cans and tuna that you went up and stocked up on, and all your rolls of toilet paper that you thought you'd run out of. So, you know, don't just count your toilet paper rolls, count your blessings. You're welcome. I'll see you guys. We'll wrap it up tomorrow. Adios.